Most traders look at the 1-minute chart and think chaos. Too fast, too noisy, impossible to master. But here's the truth. If you understand how liquidity moves, the 1-minute chart isn't chaos. It is precision. This is the exact scalping setup I have used to grow multiple accounts, day after day, catching clean moves in minutes, not hours. And by the end of this video, you'll know exactly how to do the same. When I started scalping, I blew account after account after account. I thought more trades meant more opportunity, but it just meant more mistakes. The 1-minute chart punished my lack of structure. I would chase every single wiggle, revenge trade, add to losers, panic exit winning trades. Does that sound familiar? What changed everything was realizing the 1-minute chart is only chaos if you are. Once your plan is mechanical, it becomes a printing press. Imagine taking 1 or 2 precise trades every single session, 5 minutes in the market, done for the day. That is real freedom. That is real consistency. And that's what I'm about to show you today. My entire scalping process fits into 3 simple steps. Step 1. We need to define the bias on the higher time frame. Now we do this on the 15-minute time frame, and I'll run over this a little bit later on in the video on how do we actually define a higher time frame bias based off of the 15-minute time frame, because we are going to use wicks to define a narrative. Step number 2. We need to wait for price to hit our key area, our key zone, which will be our point of interest, the area of liquidity or imbalance. It's an area in the market where we want a catalyst to happen. We need something to move price. So we're going to wait patiently, and we're going to wait for the market to trade into a space in price that will push price and induce traders, because we want displacement. We're not just going to take every single move. We're going to wait for the market to hit into a key zone on the chart so that we can expect a reaction out of that area. We're going to be patient traders. Now, step number 3 is we're going to go ahead and we're going to drop to the 1-minute time frame and execute only when we have displacement, because displacement confirms our direction. And the easiest way to get displacement and to see displacement is to wait for a fair value gap to form. For those of you who do not know what a fair value gap is simply put, it is a 3-candle pattern where we have the wick of the bottom candle does not touch the wick of that top candle. We have a gap in price action. That's it. No indicators, no guessing, just price, time, and precision. So remember step 1, we have to find our higher time frame bias. Now we can start on the 15-minute time frame for this. You can also use the 1-hour chart for this as well. But I have found that the 15-minute time frame gives me the more accurate entries. Now we want to go ahead and we want to ask one question. Where did liquidity just get taken? If price sweeps above a previous high and shows rejection, our bias is short. If price clears a low, we sweep a low, and we bounce off of that low, our bias is long. Now, what happens if price sweeps a major low or a time-based level, but we do not get that reaction? Instead, we still inverse bullish order flow. Well, then my bias is still bearish, and we will be continuing to be bearish until we are proven wrong. So now we're not predicting. We're identifying where the market has already revealed its hand. This gives your 1-minute entries a purpose. But I want you to think about order flow here as well, because we all know the thing of, we swept out buy side liquidity, so let's look for sells. Or we swept out sell side liquidity, let's look for longs. But that doesn't always work. We need to wait for the market to give us a confirmation. Now here, if price action sweeps out the previous high, we get some sort of reaction, we start trading down, we form a bearish fair value gap. We see the market trade into that gap, and we respect it. We do not have any candle bodies that closes above this gap, inversing it. What does price tell you here? When the market starts reacting out of that fair value gap, what do we know? Well, we know we just took buy-side liquidity. We know we displaced away from that zone, leaving a fair value gap in the way. And we also know that price action traded back into that gap, and we see the candles respecting bearish order flow. So what can we assume here? Well, we can assume that our low-hanging fruit target will be this low, and we can also assume that we are going to draw towards the extremity, which will be this swing low here. Then, if you want to hold a runner, we have to wait to see how price reacts at this level. If we displace through the level and we still respect bearish order flow, well, then something else is the draw on liquidity. Maybe previous day low, previous week low, previous session low. But it is not going to be a high because we are flipping through this level. We are not bouncing off of it. We have a fail flip to the downside. But then what happens? Then price action starts making lower lows and lower highs. But then we fail to make that lower low. So we fail to continue with order flow. Instead, we make a higher high or a failure swing. So there we can start looking at, okay, cool, maybe momentum is running out and we are drawing towards something else now. Maybe we are drawing towards highs. Well, here we have bullish SMT. Let's say this is NQ and we have bullish SMT with ES. And we can assume, okay, something else is attracting price higher. What can that be? Well, here we have a breaker structure and let's say price action trades into a FVG. We start respecting that gap. Now we can say, okay, my first low-hanging fruit target will be this high. My second low-hanging fruit target will be this high, or maybe even just the down close candle, the order block. Then we can start looking at taking a longs here on the 1 minute time frame towards these targets so that we can get a high probability setup. That is how we mark out our zone and we find the higher time frame narrative. So next, after that, we can mark out external, internal range liquidities, clean equal highs, clean equal lows that trap retail traders. These levels are magnets for price, and once they get taken, the market looks to rebalance towards the opposing side. So your job as the trader is simple. We have to wait for price to reach one of those zones, and then patience is our position. So as soon as price action does what we just ran over of building a story, building a narrative around price, as soon as we start doing that, we can make high probability assumptions when it comes to trading the 1 minute time frame. Now the fun begins. Once price taps into your zone, we drop to the 1 minute time frame. We look for one thing, displacement. So looking at this, before we talk about displacement, here I've drawn out the 1 minute time frame, and over here we have that 15-minute high, higher high, and a break of structure. So it will never look this clean on the 1 minute time frame. The 1 minute time frame will be full of ups and downs, hills and valleys and everything. This is how crazy the 1 minute time frame can get. It can even look worse than this. But here we see that the market made a higher high and we failed to make a lower low. This is the 50-minute making a high and the 50-minute failing to make a lower low. That's just a zoomed in picture. Well, here we can see that on the 50-minute time frame, we are trading back into an order block. And remember, we said we do have a fair value gap here. So on the 15-minute, we have a clear picture. We trade back into an order block and we trade into a fair value gap. So this gap, this zone, will be my point of interest zone. Now that zone can be refined over here on the 1 minute time frame. We can look for a refined zone or a refined order block. Now this is where we look for that displacement. Remember, a displacement is a strong push breaking short-term structure. It proves momentum has shifted. Now we are looking then for the market to push rapidly, breaking structure. Now that can mean a break of structure, a market structure shift. It can mean an inverse fair value gap. It can mean whatever. I just want to see big bodied candles shifting through highs, inversing fair value gaps. That is a very strong sign of displacement. Now, what do we need? What do we need for an actual entry? Well, I don't want you just to go ahead and take a market execution at that displacement and target the next zone. We see that we have a 1-to-1, a negative 1-to-1 in this trade. This is not favorable price action trading. So what do we need to do? Well, I want you to wait for a retracement. Price pulling back into the origin of that move. It's usually an order block, so we see that price can trade back into this order block, these down close candles, or we can see price trade into a potential fair value gap. Well, to keep it simple, I want you to take your Gann box and we're going to measure out the EQ of this move. So we're going to go ahead and we're going to put out the 50% retracement zone. That is where I want you to take your entry. Once price reaches that 50%, we place our stop below this low and we target that same level. Here we can see we have a 2.3 reward to risk instead of a 0.77. So this is the meat behind this strategy. That's our entry. Now, execution time, it's usually under 2 minutes. If the move is gone, let it go. If price doesn't retrace all the way and runs without you, let it go and move on to the next session. There will always be another trade. Here is a real trade example that my team has taken on NQ. So we see here, you see 3 boxes here on my chart. We have Asia session, we have London session, and we have New York session. Now there's no need to overcomplicate this. Asia session is from 6 to 6, but now we have daylight savings moving back. So we have 5 o'clock to 11 o'clock, 11 o'clock to 5 o'clock, and then 5 o'clock back to 11 o'clock. Those are your 3 sessions throughout the day. Now, again, remember, I'm on the 50-minute time frame, and I want to build a narrative, a story around my trade. So we wait for the market to come to 9:30 open. That is something we should always do. We wait for the market to trade back to 9:30. I just don't want to miss it. Okay, so here we have that 9:30 open. Now, what are we going to do now? Where is this market going? Well, I want you to look at the bigger picture. We see that the market on the 50-minute time frame is making lows, lower highs, lower low, lower high, lower low. But then we fail to continue with that trend. We fail to continue with that. Instead, we make a little failure swing. And now we are starting to make higher highs and higher lows and higher highs and higher lows. So I want you to look at the bigger picture. We can also see that the market has closed above all of these down close candles. What does this give you? This gives you an order block, a change in the state of delivery. So by now, I am bullish until proven otherwise. What do we also see? We also have a power of 3 pattern forming. We have accumulation here. We see the market then goes and manipulates, and now we start to trade higher. So we are in the distribution phase. We have accumulation, manipulation. Now we're distributing to higher prices. Okay, so now we are ready to take on our trading window. I only trade 45 minutes a day. That's it. I trade live every single day in my mentorship with my students, and it's 45 minutes from Monday to Friday every single day. So if you're interested to see how I trade live and you can trade alongside me, a 7-figure trader, go ahead and check out the first link in my description. So back to the chart. What do we know? Well, I've given you the narrative. We are in a bullish market because we have a bullish CISD. We have a bullish power of 3 playing out, which lines up with my bullish narrative. So now what do we see? Well, now we see the market falling back into what? Well, we have a little fair value gap here. And look at this wick rejection. We have a very large wick rejection. What does this tell you? That tells you that this market is trading or seeking higher prices. Now, my first level that we can target is this high, pre-market high over here. That would be my low-hanging fruit. So this is where I drop to my 1 minute time frame. I wait for that first 15-minute time frame candlestick to close. I always do that just to confirm a bias. And here on the 1 minute time frame, let's build a story. Well, what do we see? Well, we see we have a break of structure. We do go ahead and we close above that high. So we have our market structure shift. We trade back into what? A fair value gap. Now, this is where it can be very simple, and you can take the retracement into that gap, which is our 50% mark, and that can be your entry. Place our stop at this low, and our first target will be this swing high. Now, that only gives you a 1.6 reward to risk. The second thing we can do, the second way we can take a trade here, is we can wait for the market to give us and show us that displacement. So what do we see here? We see big bodied candles forming a fair value gap. Now, as soon as that gap forms, we can enter our trade and we can take our stop below this swing low. Because I don't want to see the market come back below this low. Why is that? Well, that's because we have an order block over here and we have this propulsion block also protecting price. But I don't want you to overcomplicate your trading. And now from here, we can simply take a 2R. Now keep in mind, this is a little bit more advanced entry reason. The simpler and easier entry reason would be is take your entry at that 50% mark, place your stop below the low, and take 2R. Now we are good to take the trade here, and we can see the market runs immediately to hit our take profit. Now this is a trade that my team caught live. Now in this final example, this is another trade that we have taken live inside of the group. So we come to the chart at NQ at 9:30. We wait for that first 15-minute candlestick to close because that is extremely important. That sets the tone for the rest of the session. I don't want you to trade on 9:30 because you can get caught in a manipulation. So looking at this, let's build a narrative. We see the market has taken out London high and we have taken out pre-market Asia high as well. We see that the market is busy rejecting higher prices. We have an accumulation. We have a manipulation. So what can we expect? We can expect a distribution to form. So we have another power of 3. We see the market has swept out a swing high and we have failed to displace above that high. Instead, we have gone and we have inversed an FVG, creating an IFVG. So we are disrespecting bullish order flow. This market is telling me it wants to go lower. Now, after that first 15-minute candlestick closes, what do we do? Well, we see that we have a very little pullback here. We have a high, we have a low, we have a lower low. So we see that happening. Now, we do have displacement, so you can go and you can mark out this little pullback. Just going to get the right thing. You can mark out this little pullback and we can enter on 50% of that range. Stop loss goes at that high. We can place it a couple points above just for spread and to be safe. And our first target will be the low hanging fruit to the left. Now this gives you a 2 reward to risk. So we see we get tapped in, we almost get stopped out, and then the market drops and hits our take profit. But here in the mentorship program, when we took this trade live, we didn't take profit there. We took full profit at this level. Now, why this level? Well, we do have a breaker block over here, which can give us some issues. That is where we took full TP in the mentorship program. So in this trade, that would give you a 3.86 R trade. which is very close to a 4R trade. Imagine that 4% in one trade. This trade took you, how much time did this take to play out? This took 16 minutes to play out. 4% in 16 minutes. That's the power of having a very, very mechanical strategy. Now, if this clicked for you, and if you are tired of guessing and ready to trade mechanically, this is exactly what I teach in my mentorship. Mechanical trading, which gives you a proven edge over thousands of trades. Every morning, we scalp the markets live. You see me from opening up my charts all the way down to execution, how I break down the higher time frames, all the way from the weekly down to the 1 minute time frame. And we use the exact same model every single day so that you know exactly and you can follow along with me. You'll learn how to master timing, risk, and psychology until it becomes automatic and second nature for you. But spots are limited because this is a direct mentorship. It's not just a dead-end online course like most people sell you. I really care about your success and I want you to succeed. That's why I trade live every single day. You have access to me every single day. So if that sounds good to you, go ahead and check out the first link in my description. And if the link works, enrollment is still open. But be sure to secure your spot before enrollment closes. I hope you guys enjoyed today's video. Let me know what you want to see next on the channel, and I hope you have an amazing rest of your day. See you in the next one.